We're live. All right, guys, welcome back to another episode of Explain It. My name is Caroline. This is my co-host, Ingryd Hernandez.
Hello.
And we have our special guest today, Chris. Is it Cahall?
Cahall, but all of it's
yeah.
It's like a K.
Cahall. Got it. Okay, good to know. I have recovered from the stomach bug, but I'm still going to let Ingryd lead this because Ingryd has dealt with more insurance policies related to creative deals. And I just wanted everybody to have the opportunity. So if you don't see one of your battle buddies on here, tell them to jump in. You can ask questions with us if you're catching us live. If you're watching the replay, we'd really appreciate it if you would share this. The whole goal of our podcast, Explain It, is to get more information out and let everybody know kind of what we're covering. So if you guys would, please share this, like this. We are trying to build this up so we can give more people access to this information for free. And with that being said, Ingryd, I'm going to let you take it away because I know that you've already worked with Chris before and he's saved you many a times from a complicated situation. So the floor is yours.
Yeah. Well, first of all, I haven't seen your face in a while.
Right.
And I, not just you, Chris, I was talking to my girl, Caroline.
I was sick last week.
It's been like to death and back. It's just little simple messages I've been sending her. Like, are you okay? Do you need me to do anything? Should I like send soup? I didn't know what to do for her, but ultimately her body just needed to get over it.
It did. It was, I will tell you guys, it's called the norovirus. You guys can look up the symptoms is what I'm pretty sure it was the worst thing I've had. And I've had COVID and the flu. So it really kicked my butt. But take it easy. I heard there's a bunch of bugs going around currently. Sleep is your friend, and nobody washes their hands. So make sure you wash your hands before you eat.
Or close the lid. I just sent I reposted on Instagram. Whenever you're on the toilet and you're leaving it, you gotta close the lid because it goes everywhere. It just shoots up everywhere. Sorry, Chris, we're talking about poop, but anyway, wash your hands and close the lid when you're flushing. But that's what makes this podcast fun. Chris is like, what the hell did I sign up for? But yes, Chris is an amazing business owner. I actually knew his wife before I met Chris. Chris, if maybe you could tell us a little bit about yourself. How did you land on being an insurance agent? You're talking to somebody and you're like, yo, I got to do this podcast with Ingryd and Caroline right now.
Yeah, no, it's great. I certainly want to spread awareness that insurance is something that you shouldn't be afraid to partner with someone. And so certainly it's nice to have a resource that you can reach out to direct and can lean upon to know that when you are coming to the table with a deal that you need to make happen, that you have some corner.
Yeah. I'll send Chris. I'm like, hey, can I get an estimate? Here's the address, the little things. Like, I'll just send him the MLS listing if it's on MLS, just so that I know, like, hey, what can you do for me, bud? And so, it's been great to work with Chris. So Chris, tell us a little bit about yourself. How did you land on being the premier insurance agent in the city of Maricopa?
So I ended up moving here in the economic downturn and was really struggling to find employment and was lucky enough to be offered a job with American Family Insurance. And I've just really dug in and put my roots right here in Maricopa, Arizona. I'm licensed right now in North Dakota, Colorado, and Texas. I just got licensed in Texas, so I'm working on that platform for quoting, but certainly open to being licensed in other states if there's a need. It takes maybe a week to up to 2 weeks for all the background checks and everything to happen, but certainly can expand that area if there's a need.
Awesome. So I know that in creative finance world, I guess we could just jump right into it. One of the more difficult parts as an investor is trying to avoid and instigate the due on sale clause. And one of the ways that gets instigated is contacting the lender and contacting the insurance company to let them know, hey, there's new ownership and here's the policy that goes with it. So tell us a little bit about just the concierge service that you already have, Chris. I know that I've been able to leverage that for me. Tell us a little bit about how you do your business. Because honestly, you're like, you mean my concierge service? I do this for everybody. Like, it doesn't have to be just creative finance. Like, if I call him and I'm like, hey, I need to change my insurance, he takes care of everything. And that's the kind of partner you need. So tell us a little bit about that, Chris.
Certainly. Well, most important thing is to make sure that everyone's comfortable. And sometimes it takes a little hand holding. So we just need to get the information for the client, the seller, the person that's going to be on title, and the mortgagee clause, the number one, number two position. We can structure that completely in our policy, make sure that each entity or individual receives the correct paperwork. And then after that, we follow up within a week or two and make sure that there isn't anything else that needed, so there isn't any surprises coming down the pipe. And that's really what's most important, is that we don't want to be surprised, and we don't want our clients to be surprised if there is that issue where we have to fix something or we can do something and just think outside the box.
Awesome. And there you go, folks. Don't be afraid of changing the insurance on a property that you own simply because you're afraid of instigating the due on sale clause. So Chris's team, I love this because when I talked to Chris, I was like, hey, so here's our situation. We had a subject to property out in Deer Valley. And what did Chris do? He just made an SOP, baby. So like when you know somebody cares that, like, here's what I've been starting to be super judgmental on, and forgive me, everybody, because I'm just a judgy person. I read the book, The E-Myth. It's a book by Michael Gerber. Highly, highly recommend you read it. And in that book, it talks about, are you a business owner? So are you working on your business, or are you working in your business? And a fundamental component, sorry, English is my second language, and I was speaking Spanish for a whole hour last hour. A part of having a business that runs well is systematizing everything. And so I remember talking to Chris, and I was like, hey, are you ready for more business like this? Because one of the biggest hangups in creative financing is changing the insurance. And SOP stands for Standard Operating Procedure, meaning whenever this comes up, how does our business do it every time? And you only manage 2 exceptions. That way you're not questioning it over and over again on how to do it. So one of the things that really impressed me about Chris, despite him being my friend, because he is my friend, he was like, yeah, don't tell your friends about this quite yet. Well, we can't see you anymore, Chris. Don't tell your friends about this quite yet. I need to make sure I got all my SOPs ready to go, and making sure that anything concierge service related to creative finance my team can handle it. And I was like, okay, I love that. He took the pause and he's like, how do I systematize this? So
right, we wanted to work out the kinks. I don't want to jump in and disappoint someone. You only have that one chance to make that impression, and then if you burn that one chance, you'll never get it again. You'll never get it back. So it was important to me to make sure that my team knew what we were getting ourselves into, that they understood how the deals need to be, the policies needed to be structured, and what it kind of looked like from an outsider looking in, and make sure that we knew that when these types of policies and situations came in, that we were ready to jump on it and assist, because sometimes those things need to be turned around pretty quick. So important that we are bringing all of that information to the table so that you have what you need in order to have those warm and fuzzies moving forward.
Amen. Well said. So it looks like we're already starting to get questions. Go ahead, Caroline.
We are getting some questions. So I just want to ask before we get over to these questions, because I know Tanisha has a bunch of good ones. So when people reach out to you, or is it on your website, kind of your SOPs to work with you, or once we decide to work with you, you're going to show us what we need to get started?
Once you decide that you want to work with us, we'll have a conversation as to what I need every time that you are bringing those sellers, buyers, and the mortgage company. I need all that information up front so that we can structure that policy so that there isn't any questions on that second step.
Perfect. And then before we get to the questions here, Ingryd, I know that you've used him a few times just to give the story for everybody. You've had some situations that were kind of hairy. How many tight squeezes has Chris got you out of before? And I don't know if you want to share the stories, but how many really like uncomfortable spots were you in where you were really stressing and Chris was like, I'll jump in and I'll fix what has happened with the JV partner?
Sure. I would say hairy would be really just like a single one. The other ones weren't hairy per se.
Okay.
Other than me being a pain in the ass for Chris, because I didn't have all the information for him. Because there was a really good question Tanisha asked, and part of that is expressing to Chris what your exit strategy is so that he has the right policy for you. But yeah, we had a property that we could not sell on our wrap. It was becoming really difficult to do it that way. So it was easier to actually just sell it subject to. So just a straight wholesale situation subject to the existing mortgage. Now, the buyer mostly spoke Spanish, but between myself and another partner that we worked with, we were able to negate some of the questions being asked. Because part of actually what you need to worry about, or I don't want to say worry about, something you need to consider is also whoever's property you're taking over subject to. And Chris, you can clarify this a little bit. If they have good or bad credit, it actually impacts the policy that you're going to grab because of the existing mortgage conditions and things like that. Is that correct, Chris?
Absolutely. There's 34 to 50 different attributes that go into figuring out an insurance policy now. Anything from credit, bill pay history, driving history. It's all ones and zeros now. So the data is really driving that cost. Most of the people that I've worked with in the past are have less than perfect credit. And that's why they're looking into these types of deals, which is perfectly fine. It's a need. There's a need out there. And I'd rather see people building their dream by owning property than continuing to rent from landlords. That's just the way that I feel about it.
Yes, and I agree with that. Whenever we use a wrap situation or subject to situation for a primary homeowner, that makes sense. But that was one of the times that I was like, oh, my eyes are opened a little because I didn't realize when we take over that property, whatever the credit condition, basically that's negated by that property, like whoever I'm connecting myself with, right? So Caroline, if I'm taking your property over and you have your history attached to that property because you're named in the policy, right? Like when we do creative finance, we have to name all the additionally insured and who the primary policy holder is and all that. But because now we're intertwining ourselves in that insurance policy, your credit actually impacts me too, and from what that policy ultimately becomes. So that's not something we've ever really talked about ever.
I've never heard that. So that leads me into the next question. When you typically the houses that we're buying that are subject to, we're buying them from people that are in a lot of pain. They're in pre-foreclosure. They can't afford to catch up. They're behind them. They're behind. So they have bad credit when you're buying the house. So like Tanisha said, so pre-foreclosures are going to cost more because the credit is bad. So my question for both of you then, in a couple of months, when we're able to help this seller's credit go back up because we've caught up the loan, we've been making payments before the payment is due, we're making them early, and the credit goes back up, we can just reassess and get a lower rate on the interest?
We can do what's called reconsideration, but once we do a reconsideration, most companies, they lock that in. So if the credit is worse, it can actually impact the cost even more. So that's something that needs to be a little bit more
considered.
Yeah.
Really, be just so that we make sure that we're putting the best rate forward.
Yeah. The way that I see it is like, if I'm helping somebody in pre-foreclosure and their insurance is a little bit more costly, I'm I'm not necessarily shopping that. Like once I know, I mean, you shop it up front, right? But once I know this is the worst case scenario, I'm not poking that bear again. Like, okay, great. Here's my policy. I just have to formulate that in my calculations and then we move forward. But absolutely. Now, if you refinance them out and you know your own, credit history and you're good to go, then I would say have it reconsidered, or what's it called? What did you call it?
Reconsideration. Yeah.
Reconsideration.
Yep.
Okay. All right. So Denisha asked the question, does the policy you write depend on the exit strategy? And I know that you and I have done a couple already that way where you're like, wait, what are you doing with it? Tell me what you're doing with it so that I can give you enough coverage.
Right. So depending on if it's a long-term rental or a short-term rental or a subject to property, we will put the policy together depending on what you are trying to do with that policy. Now, the only time it really gets tricky is if there's a vacant aspect to your plan. Because if the home is vacant, that means it's not owner occupied. And if there is a claim or if there's a pipe that bursts, it may not be found out until for 3 days. And a $3,000 claim can turn into a $50,000 or $70,000 claim. And that's just not what insurance companies are looking for. So it's important to just be upfront with whichever insurance provider that you trust so that you make sure that you're covered, the client is covered, and the bank is covered. Ultimately, though, the asset is covered, and if anything happens, you know that it's going to be rebuilt or repaired to what it is today.
And here's what I'm going to tell you, and this is not my horror story, but I have to say it because it recently happened to somebody in our mentorship. They literally took over a property. We're 2 days away from closing on the property, and with a wrap buyer. So to explain, I don't want to get too into the wrap stuff, but like the investor in our community bought the property subject to and was selling it to a new buyer, and they're wrapping those mortgage terms over the existing mortgage, which we could talk a little bit about, like, hey, from an insurance perspective, what information do you need to know to make this, work? But right. What happened was they did not change the policy. They didn't have a Chris Cahall that they could call on and say, hey, go change my policy. It is going to be vacant. Maybe my insurance is going to be high for 3 or 4 months, but then we intend to change the insurance again so when the new buyer is in place, they have their own owner insurance and, name all the people involved, right? So they didn't do that. Well, in that neighborhood, this is in Texas, some kids are supposedly committing arson. There are a few houses. I don't know if it's arson. I don't want to go that far. Maybe they're playing with fireworks. I'm not sure. Something like that. And so a few houses go up in flames, including this property. And so now they've been sort of like, oh my God, what do I do? They talked about an adjuster. I don't understand what that means. Maybe you can explain, Chris, like somebody else involved to help them get covered. But part of what they said was that might help them. That might actually help them get the claim actually followed through, is that even after the fire, they were still sending their payments with the mortgage. So again, the insurance is still under the previous owner's name because they hadn't changed the insurance over, but the insurance was taking the money. So because they were taking the money, they can still potentially be held to the policy, because otherwise they should have stopped taking the money after finding out that the deed had changed. So
right. Yep.
So what is let's an adjuster first.
Yeah, I can't speak on. Oh, you want to know what an adjuster was?
Yeah, what is an adjuster? Just because we talk about that.
An adjuster is a outside extension, an internal and external extension of the claims department, which will go out to a property claim or a casualty, which would be like an auto claim, and then they will look at the burned structure in this case, and they will decide whether it's a total loss or if it can be rehabbed and brought back up. Because insurance is only out here to make you whole. It's not here to make you rich. There isn't any insurance out there that's a savings plan or out there to make you rich. It's only to make you whole again. And that's what, if your insurance company is selling you something else or spinning something, that's probably not the person you want to work with.
Home insurance specifically. So yes.
Right.
Mm-hmm.
Yep.
Because I'll get you on that life insurance. I have my own strategy there, but anyway. Right. Cool. So part of the thing you have to communicate. So in my opinion, your insurance person should be a part of your team, especially if you're fix and flipping or if you're wrapping deals. Like you should have somebody on your team that you can count on to say, hey, here's what I'm going to do with this property. It's going to be a long-term rental, or, hey, I'm going to wrap this. So I just need insurance coverage, vacant insurance coverage for like 3 months. Whereas, then it'll change again. And of course we'll use a preference to Chris, knowing that we'd want the new person just to have that concierge service, that easement of change over the policy. So, and you want to make sure you have enough coverage. So what are some of the, because we're talking to an investor audience, for those people who are long-term renters, holders, or those who are short-term, what are some of the advice that you would give on like levels of insurance they should have? What are some of the fundamentals? So,
I mean, with a property, you always want to make sure that it's covered by, at replacement cost.
Mm-hmm.
You want to make sure you have, that it's not a bare bones policy, that it's going to protect you, your client, and the bank. Ultimately, the bank is going to tell you if there's a problem because they're going to review the policy. And if it's not up to their specs, they're going to send it back and say, I'm sorry, we're just going to force place our own insurance. And that's extremely expensive, usually 2 to 3 times the amount that one of the policies that an insurance agent is writing.
Because they want to protect their asset.
Correct. They want to protect their asset. Most of the time, the mortgage companies have their own internal insurance company that they utilize. So they're going to take that insurance cost and they're going to bump it up, and they're going to make a little cut off of that as well. And that's just the way that I've seen it work in the past.
That's how businesses work. Okay.
Yep.
They're arbitraging insurance. Okay.
Fun stuff. All right. I want to get to the other question that Tanisha had over here on the side. She said, if you're not licensed in our state, can you help another agent understand how to do the policy? So I know Tanisha's in Virginia. I don't know if you're licensed in Virginia. And I saw somebody earlier, Darina, said that she's trying to do something in Florida. What areas of the United States do you cover? And then if you don't cover that area, can you talk to other agents?
Absolutely. That's not an issue at all. I certainly extend professional courtesy, but getting a license in another state is simply going online, proving that you have a license in your resident state, and then they do a background check, making sure you don't have any issues or infractions on your license, that you were doing some improper act. And
so what Chris is saying is, if you have a lot of business in Virginia, he's willing to consider getting licensed there, so you don't have to train nobody.
Of course. But certainly I would extend the professional courtesy to, it's just how can you structure the insurance policy so that everyone's happy and everyone's covered.
Yeah. And you see that collaboration over competition. So the more people who are informed like this, the more people win in the end. And that's really an abundance attitude. So good job.
So
Chris.
just to recap. So you're only licensed in Arizona at the moment, mainly Maricopa County.
Well, no, Arizona, the entire state of Arizona. Just got licensed in Texas. I just have to figure out how to get my software to work correctly.
Okay.
And Colorado, North Dakota. I work with, I don't only sell property insurance. I also sell insurance for farms and businesses. So I had some farm clients up in North Dakota that wanted me to insure them up there. And so I got licensed.
Okay. Easy enough. So if we need it, you'll fill it. You'll go get licensed in it.
Absolutely. If there's a need and I can see that this is something that I need to do. The license is normally less than $200 for the state, and the requirements are the same anyway. I just have to continually, pay for that license every 2 to 3 years or whatever the metrics are for that state.
Okay. All right. Well, then that's going to lead me into like why we should use you over others. And it's going to come back to Tanisha's next question, which is what should we not do when it comes to insurance on a sub-2 deal?
Well, I would make sure that everyone's covered. Like that's the most important thing. If the bank is happy, you're not going to have any problems. So just going back out to that bank and making sure that do you have everything you need? We've sent over all this paperwork, and following up to make sure that they're not going to come back and send out that due on sale clause, which is the nightmare. Then that's really the only thing, just making sure that you're following up and doing your due diligence so that there isn't any problems. And if there are, you just deal with them as they come. Okay.
So just for everybody, if there's anybody new, due on sale, if you take over property subject to, you're taking it over subject to the existing loan. And if the bank doesn't like it, they're going to just be like, we want that loan to be called due. You have to pay it in full. That's due on sale. So what I'm assuming, this is probably not a great idea either. Should we call some insurance companies and just say, hey, I'm buying this house subject to, I want to, I need to change the insurance. Should we say that?
I mean, honestly, you could do that, but I would say Ingryd's been talking to me about subject to properties for probably 2 to 3 years now, maybe more, maybe longer. And I didn't really grasp the concept until probably last year. So it's most of the time I would bet that you're probably going to get a response of what is that? Mm-hmm. That's where you really need to make sure that you have that personal relationship with someone so that when you're sending them those deals, they already know what's coming down the pipe and they've already got their process in place. You want to make sure, again, you just want to make sure that the bank is comfortable because they're the ones that really have the power, in these types of deals. They're the ones that own the asset because they have the debt.
Yeah, exactly. At the end of the day, that's the case. I would say another thing to not do when you are doing a subject to deal is ignore changing over the insurance. I do believe that was why in the example I gave in Texas, it was like, oh, it's only going to be a couple months, only a few months. So, we'll just wait until the end buyer is ready for it. Whereas in the example I gave you where Chris helped us, we were already taking care of it right away. Yes, the subject to piece was getting taken care of, but I feel it mitigates your risk when you have a professional licensed agent just doing it for you. Yeah. I'm not calling and saying, hey, I have this durable power of attorney, which I'd like to talk to you about, Chris, that says that I can call you and that I can change over. And then the other person on there, right, they're going to have their red flags up because
their spider senses are tingling. What?
Right. Like, hey, this is unusual.
I don't get these calls all the time.
Exactly. It's an unusual transaction to have a power of attorney. It's an unusual transaction to, unless it's like my mom, right? Like, hey, my mom's in a home, or something like that. I have durable power of attorney. I got to make sure her insurance is good to go, blah, blah, blah. That makes sense. But if my name and that person, and we don't have like a familiar relationship, it's going to sound weird. And I would want my insurance company to be like, who the F are you? Like, what are you doing? Like, they're supposed to try to manage fraud and things like that. So I think leveraging a licensed professional to take care of that transfer of insurance policies is the best thing you can do. And honestly, as a business owner, it's one box you got check mark that you don't have to actually take care of. Like, I could just be like, Chris, here's the address. Here's the new policy. We're going to make it a short-term rental. Take care of it, bud. And he'd be like, okay.
Yep.
You're delegating. You're not reinventing the wheel. You're getting somebody who's an expert who does this day in, day out, instead of trying to figure it out on your own.
Right. Exactly.
Do you have something you want to add there, Chris?
Yeah, I mean, you said short-term rental, long-term rental. Also depends if it has furniture, because we can, insurance companies can cover that furniture as well because it's business personal property. So, I mean, you are running a business. This isn't a personal home. This isn't an asset of yours. This is your business, and we have to be able to cater that policy. But it's nice to have that one point of contact so that both of you are on the same page when you make that call. You're not calling into a call center and getting a different person each and every time that you call, and you have to continually explain yourself.
Well, this is a good question.
Oh, I see. You like it.
Does it make sense to have insurance for a home that's been condemned? I'm sure that that's what they meant. Though you didn't know it at the time.
It's probably uninsurable. If it's condemned, it's probably uninsurable. Every single underwriting team, when you submit a policy, it's going to go through a process on the back end on the corporate side. And they're going to they're going to look to see, is the applications that are coming across my desk, are they correct? Are they valid? Is the information that the insurance agent is stating on this application exactly what I'm seeing on the internet? So they're going to Google that address. They're going to look at Google Earth. They're going to look at the MLS if they have access to it. Any resource that they can in order to see what type of condition that this property is. And sometimes you even have to submit pictures for that property in order to have the coverages that are requested. So I highly doubt that a condemned property would even have the ability to be insured with a replacement cost type homeowners policy. Now, you might be able to get a construction policy where you're insuring the property for the full value of when it's fully built, but you're also insuring the building materials that are dropped off on site. Ooh. So you get off drywall, plywood, it's a more expensive policy because there's nobody there. There's nobody watching the property, but it covers the work and the financial burden that you have, taken on in order to
the risk. We're investors. We take risks. So something that Chris is talking like a lawyer right now, so forgive us. But no, I've had Chris give me policies before on fix and flips because yes, we're thinking about development right now, right? Condemned property, probably have to do from like ground up, but fix and flippers need policy insurance for that purpose. We're going to have materials there. Of course, we're going to secure it as much as we can. But you can never know, especially with the property is vacant. So I'm glad you even said that before. Properties that are vacant are actually a higher risk for insurance companies. Absolutely. So you have to be aware of that. Mm-hmm.
Yeah. And flipping.
Oh, we lost him again.
Speaking of flipping, he flipped right off. What is happening? I think it's his screen. It probably turns off. You got to keep touching your screen.
We can see you now, Chris.
Oh, there you go. Sorry about that. So those flipping policies, they're the best type of policy is to, which takes a little longer, but you and the client, you and the flipper. So the flipper and the insurance agent decide how much property coverage they want in total throughout the year. So let's say you want to hold 6 houses. You're the type of person that wants to flip 6 houses at a time at 1.5 million. Well, we're going to have a property coverage at 1.5 million, and we're just going to move properties in and out of that policy as you fix them and sell them. The policy, the cost is more expensive because those properties are vacant. And sometimes they don't have windows, and sometimes they don't have doors. Sometimes you're in the middle of construction and the property is open for the night. So there's a higher risk, and insurance companies realize that. So it's good to know, to make sure that you have someone in your corner that can structure a policy for the type of business that you want to run. It's just not a one size fits all type situation.
Right on. So we had a question. How long should you wait before switching over the insurance? Right away, buddy.
So you should get everything ready right before closing, and on the day of closing, you're going to have the insurance switched over to your entity's name to protect you.
Correct.
Right.
Mm-hmm.
Okay. We already heard our horror story about the one in Texas. All right. Do you see Eddie's response down below?
Yeah. So he has a subject to property that is his primary, and he bought it 6 months ago and hasn't yet changed insurance. Please help with feedback.
Go get insurance. We just said it.
So Eddie, what state are you in? Chris would be happy to help you get the right coverage and the right support. Oh my gosh, Tanisha was an adjuster. Oh, she's a licensed adjuster in over 30 states. Tanisha is one of our favorite people in our community. She's amazing. And one of the things that she's actually started to do more is midterm rentals. And so sometimes when there is a loss, do you have to, by the way, or do you have a department you send people to when, like, let's say the property I insured, my tenants now need to find a new place. Like, what is that called? Like, am I paying for that?
Or you mean like something happens with the property and
when they happen to the property, now I need to find a place for them to move to while the property is getting fixed up.
Do you need to, or does that come under your lease, or do they have renter's insurance?
No, that's a policy that they're going to have to hold as individuals because they don't have any insurable interest in the property that they're renting. They're just tenants. They are just using that property to live while they're moving on to their next step.
Interesting.
So
right, Caroline?
Yeah, I know that's why you're saying it. So as tenants, the tenants should have renter's insurance to protect themselves in case there is a fire or whatever may be. And the tenant's insurance would make sure that they could go rent somewhere and stay somewhere that's equivalent to what they're paying. Or
the investor will want to have a business income type option within their policy built in. That way, if something does happen, you're still on the hook for that mortgage payment. And you want to make sure that the insurance company can come out and give you what you're collecting in rent or a median of that, and be able to, so that you can meet your payments during the time that the property is down.
Yep. I just insured a property in Tucson with Chris, and actually the lender had a requirement that said that that I would at least be covered for 6 months of mortgage. But Chris was like, no, girl, you need a year. And I was like, okay. Now, I mean, he's doing his job. He's an insurance agent, but I agree with that. Like, think about COVID and things that happened during that time. Like I actually feel better if I have a year's worth of coverage should something go down.
So when you have a year's worth of coverage, I'm assuming your insurance is maybe a little bit more expensive, maybe an extra couple bucks a month.
Yeah, all of these coverages, depending on, if we turn the coverages up, it's gonna cost more. It's the way of the world.
Yeah, I would say it this way though. Like, I didn't feel like it was astronomical, and This is a business, so I have to think like a business person, more somebody like maybe has a scarcity mindset. Like, I need to make sure that my business can continue and I'm not going to put myself in a bind. But in my opinion, it's been very reasonable, what we've had to pay, and very competitive. So for me, like I love Chris, but I'll still get another bid just to make sure that the insurance.
Keep you honest.
Right.
I don't
keep you honest, Chris.
Yeah, I don't win all the time, and that's okay. As long as we keep trying to do business together, let's see if it'll work out. If it doesn't work out, we'll try on the next one.
Yeah.
Trust but verify with everything, guys. I love that. So let's get to Tanisha's next one because I know we have 20 minutes left. I want to try and have time to ask you some other questions, Chris. So midterm versus short term versus long-term rental insurance coverage, how do they kind of vary? What is like how those policies differ? If you have a long-term renter compared to a high turnover where you have short-term, I'm sure those policies are going to look different. And what most people, if you are not aware, midterm rentals can be nurses, and they might even be insurance people that are filling homes for when there's a fire damage. So could you kind of dive into that for us, Chris?
So short-term and midterm rentals are going to be probably structured the same. It's the property coverage as well as business personal property, because those nurses and those adjusters that are flying around to those catastrophic claims, they aren't bringing their beds and silverware to those homes. All of that's covered under that policy to make sure that the person can show up and just start living and do the job that they're there to do. Long-term rentals are always going to be a little cheaper when it comes down to the coverage on an annual basis, due to the fact that there's someone there that is going to be there for an entire year. It's going to be fully occupied that entire time. There's not going to be any gaps where the home is going to be vacant. And but those policies normally don't come with business personal property. So because that renter is moving in for an extended period of time, they're bringing their stuff. So it just all depends on what situation you're in with you and your business, and then making sure that you have that trusted resource to cater that policy to you.
So that's going to lead me into you, Ingrid. How would you classify the Mindset Manor, since you have it furnished?
So I rented it technically long-term to Marlon's business. And then he's subletting to you all to lease by room. So that's the way we kind of structured it. And actually, and then that policy, we did add personal belongings in there. There is a coverage in there that says, hey,
business. Yeah.
Like, the dining table,
whatever your property is.
Right. Right. What's ours, not yours as a tenant.
Yeah.
Okay. Fascinating. Great. Well, let's keep it going. Go ahead.
Can add that endorsement. It's just a long-term rental. Most of the time, renters just bring their stuff.
Yeah, their own furniture. Gotcha. All right. So Sean Bolden said, can you explain how a seller received a check from their old insurance after I paid for new insurance? They claimed it overlapped. I'm assuming Sean wants that money.
So it's likely in that situation, when you have a mortgage and you are paying your insurance through an escrow account, that if you're due today, well, that policy was paid a month or two prior, because that mortgage company is accruing plus 10 to 15% of that mortgage cost in your payment every single month. So that when it comes to 2 months before your insurance policy expires, they're sending out that check to make sure that they're covered. It's not for your benefit. It's for the bank's benefit, because they're the ones that has the asset. So if there was a preterm cancellation or replacement, what the mortgage company will do is they will refund that existing client the remainder of the money that was due for the months that were not covered, and then they'll start over with that new person.
Yeah. Yep, exactly. They're the ones that purchase or pre-purchase the policy per se. So
right. Yep.
Oh, and Caroline keeps coughing. Poor girl. She's getting over it all. So that's why she's exiting left at some point. So let's see. Tanisha has all the questions. Tanisha, we should really just send you a link and you should just get on the platform with us. She mentioned more people need to know about business insurance. She's had a hard time with that. I am curious, like what question, like I am exploring potentially buying businesses. What are some of the things that a business owner would need to give you so that you can properly insure them?
So let's just take, for example, like someone who flips houses. Mm-hmm. We just need to know if it's a individual, a manager-owned LLC. If it's a partnership, we need to know all those partners, all of their information. We need the EIN for that entity that they're utilizing in order to purchase those houses and flip them. Addresses for each of the homes. And then we would just go through everything that, that the application needed in order to make it whole.
Yeah.
And there.
Well, I'm curious. So let's say you said you insure a farm. So what's typical of a farm? What's typical? I'm just curious now. So like, what's typical of a farm that you would want to insure?
Oh, farms are great to insure.
Yeah.
I love working with farmers because they, most of the time, they have been farming in that area forever. There's a lot of history. There's a lot of family, and farmers do very well. So, and they want to protect what they have grown and all the assets that they've gathered. But with a farm, you're doing the farmhouse, you're doing any of the outbuildings, you're doing cattle, fencing, the well, any of the combines or tractors, any of the tools that they use in their shop, ATVs, anything that they would in that we can help out with. There's even coverage. I mean, we don't need it in Arizona, but there's lightning and freezing coverage for animals, but we don't really need that here in Arizona. Yeah. So, but yeah, farms are great to work with. It's always really interesting to see how people have grown their operation from the ground up and catered it and kind of, have that niche cut out.
Yeah. Awesome. So I want to make sure we have enough time so that we can tell people how to get a hold of you, Chris.
I was going to say, I'm seeing so many people. How do we get a hold of Chris? Where's his contact information? So do you have social media, Chris? Do we just send you letters in a bottle? What's the best way to contact you?
I mean, all of those would work, but not as efficient. Certainly, you can contact me here. I'm out of Maricopa, Arizona. I give all my clients my cell phone number, which is 520-610-3306. Looks like everything's up there. Sorry, I got to put that on. Yeah.
Your Instagram is private. I just realized. Okay.
Is it?
Yeah.
Oh, I didn't know. I'll try to make it. I'm trying to be more active on Instagram, so I'll certainly make it public so that people can come and find me. Certainly. Outside of that, there's email, and my email is ccahall@amfam.com. I'd love to connect with anybody, talk to them how they can get in touch with me, and I can probably put it in a chat here if I can.
No, I got it. I got you.
Yeah, Ingrid's got it. We'll have her throw it up. Don't worry about it.
So C.Cahall@AmFam, and then you want your phone number out there?
Yeah.
Yeah.
Give me the phone number.
I'm just checking. Which means you're going to have personal service, y'all. So I'm going to put it here. Keep chatting while I put it on here.
Well, I'll answer a few more of these questions in here. So here's one that somebody said, we're new. We have an LLC in place, but we don't own any properties yet. Should we get an umbrella policy to start with if we haven't done our first deal?
There isn't a better time to get an umbrella policy than today. If you think that if you have assets or something to lose, you want to make sure you have enough coverage between yourself and anyone that wants to take those things away from you. I always recommend an umbrella policy, especially if you're a business owner. It just doesn't make any sense. I mean, you should have a personal umbrella policy and a commercial umbrella policy. There's just the cost amount. Maybe it costs you $1,000 a year for both of them. It's worth it.
If you're going to have a fire and it's going to burn down a $300,000, $500,000 house that you have a mortgage on.
Yeah.
Right. Yeah.
Okay.
It's covered a little, but the umbrella is more for liability, but certainly you need to make sure you have coverage. Yep.
Okay.
Somebody did ask, if you want to avoid the due on sale clause, would that mean paying 2 insurance policies? First of all, no. You cannot have 2 insurance policies. You can only have the one.
Are you sure? I was thinking of putting one out on you.
Well, life insurance, you could
have a few.
But no, when you have 2 policies, let's say one in your name as the investor and one as the seller, you're actually now going to create conflict with those insurance companies because one's going to blame the other on who really is required to pay out under a certain circumstance. So you're really not helping yourself out. It really should be, what is the actual what is the property actually being used for? and whoever the person on the deed is, who actually is the owner of the property, and how should they be insured, or how should the property be insured? So at the end of the day.
Yep. Absolutely. Just make sure that the bank is comfortable.
Yep. Have you seen any other ones, Caroline?
Well, I'm just going to put his phone number in the side chart really quickly, just so everybody had it.
Oh, I think I did.
You
want to put
I'll post it so everybody can. Oh, perfect. I see it right there. So now you guys can see it at the bottom of the screen. So here's information here. Tanisha had some good. She just saw Tanisha. I like Tanisha because I know she works in insurance and I know she knows a lot of this. She already said that she officially loves you. You're very knowledgeable, and then she's made a comment for everybody. If you price your rentals right, the policy is paid for by your tenant. She said, "Sorry, I have so many questions. What a great topic." Insurance, you think would be boring, but it really is something that's important and you need. For a wrap on a sub 2, would you have 2 policies? Would you have? Are you reading that one? Would you have 2 policies?
No. Where is it? Is it?
Pulled up. And 10. Oh, she meant to say then. And then what happens when there is a dual insurance for you as a sub 2 buyer and the wrap buyer as a homestead buyer?
Let's try this again.
So when you have a policy like a sub 2, you have the person coming in that is going to be occupying the property, and they're the ones that wants the property. You have the bank, and they're the ones that we need to make sure is comfortable. You have the other owner. You have the owner of the debt, which is going to be underneath the mortgage company, but this guy's the deed holder. You want to make the policy is going to be in this guy's name, but the mortgage company and the title holder, the deed holder, they have to be listed because they're in that
additionally insured.
Right. Like an additional insured. Yes.
Okay.
Mm-hmm. See what I'm saying? It can get complicated. So you need a professional that you can trust to just do it.
So let's do it one more. Let's do it one more time just so we make sure we're all on the same page here. So we'll go over here. We'll use our visuals as the person as I am. So look, this is perfect because I'm on the side. So Chris, you're the original owner of the house. Okay.
Right.
I bought the house subject to. Okay. I'm taking it over for you. I'm buying it from you. I'm going to start making the payments on your behalf. And I have Ingryd, who's going to be my homestead buyer. So the policy was originally with you, and now I'm getting my own insurance policy that's going to cover it. But you are additionally insured, and now I'm having Ingryd as additionally insured. Until I give her the deed.
Correct.
Absolutely.
And it's all on who takes priority. So the way that it's insured, it's the mortgage first because it was their first and they have first lien position.
Mm-hmm.
Technically, when you sell it to me on the wrap, you're not in first lien. You're in second. Let's pretend there's no other liens. You're in second. So we have insurance has to make the original mortgage whole because that's the first subject to. And then let's say you're secondary to that. And again, insurance is not to make anybody rich. It's to make people whole, to make the lender whole. So if there is a catastrophe, the goal is to have these policies structured right. And hopefully, Chris, I'm saying all this correct and be like, Ingryd, I trained you right. That let's say the property needs to be rebuilt. The goal is to make sure the depending on where you sit on the lien priority, that those are people who are covered first.
Yes. Yeah. And it really, most of the time, no one's going to get paid out because if anything happens to it, it just gets rebuilt.
Yep.
So it's just who's in the matter of importance. And if anybody ever was going to get paid out, it's going to be the bank first. Or anybody gets anything else.
Mm-hmm. Yeah, they're going to CYA. Okay. Rhonda has a question, and I know we have 5 minutes left here. I have power of attorney for a guy. He has 3 houses, 2 are rentals, and 1 he lives in. I found out he doesn't have any insurance on any of the houses. Chris, could you help me get insurance on his houses?
Absolutely. Absolutely. So he's got 1 primary that he occupies. Yes, 1 primary that he occupies and 2 rental properties. Not a problem at all. Especially if they're long-term rentals, that's something we can certainly do. Just like going back to that condemned, they have to be in good shape. No insurance company is going to want to insure a property That's from 1962 and hasn't had any updates done to it, no maintenance done to it. Insurance companies want homeowners and property owners that have taken care of their property. They don't really care about if he had insurance for the last 10 years. If the property is good and it's something that we can insure today, that insurance company can move forward on that policy.
Okay, this is a really good question. I have to bring this up here. So, Chris, I bought a property subject to, I'm about to close on it. What information do you need to transfer that policy? Or do you recommend that we call the bank or let the insurance policy that's existing know that we're changing hands? What do you recommend?
We just really need to know the mortgage information. We can call, there's a special mortgage address and insurance line that we call because they want all of their mortgage information to go into one certain area. It's not where you pay your bill or anything. This is just a strictly for insurance. And we get that information, we plug it into our computer, and it sits where it's going to make them happy, and then send in the information. That's it.
But you need our durable power of attorney, right?
Well, yes, that would help. Certainly.
Okay. So here's some fundamental things that you need when you're a company doing this kind of business. Okay. So I have my LLC. So Chris has my, do you have my LLC? I can't remember now because it's been so long. Like you have my LLC info. Like
there's some LLCs too.
Yeah. Yeah. Like articles of organization, right? Like, hey, I'm a legitimate LLC. So they'll make sure that we're in good standing. You'll have the durable power of attorney that allows me to say, hey, please change policy on this property that I'm now taking over subject to, or through a wrap or whatever. And then really just the fundamentals of the property. You know, there's the characteristics, how many bedrooms, how many bathrooms, does it have a pool? Is it in a flood zone? There's characteristics that are about the property that will mitigate the level of policy you get. And I can't think of anything else right now. But no, lady, don't call the bank. Get a professional to do it for you and delegate that process out, because just like Chris said, the lenders, mortgages want to make sure that they're dealing with professionals. So when we dumbasses call and we're like, hey, I just bought this property subject to, their red flags are going to go up. So to avoid that, just use a professional insurance agent to transfer over these policies and avoid all of that.
Yeah, most of the time too, the insurance information that we need is on the back of a mortgage statement. If you turn it over, all that legalese and information, a lot of times that mortgagee clause that we need is right there in the back.
Well, boom, there you go.
All right, I know we're running out of time here, Ingrid, so I'm gonna let you bring us home with the next few questions.
Do you ever get questioned about the policy being changed to a LLC? Most
of the time with these types of policies, we're writing them initially. It's a business policy where it's a business. So we are changing. If you go from an individual to an LLC, the rates are different. So
what I'm hearing you say is that when you call the lender and you're saying the policy's changing because maybe it was a single family residence and now it's a business, you're not necessarily getting that question because you're the insurance agent. You know what you're doing. You're just telling them, hey, it's this, now it's that.
Right. The asset is protected. So now it's just a rental type policy and
Right.
Mortgage companies all the time. If somebody's trying to insure a personal homeowner's policy under the name of a business, that's a problem because it's not a personal homeowner's policy. It's a business policy. You are a business.
Mm-hmm. Yeah. Caroline, are you talking?
Yeah, I see as soon as I start talking. I bet it moves a little smoother as well when Chris calls because they're like, oh, yeah, this is Chris. I spoke to him on a different policy a couple weeks ago. He's always on time, he's punctual, and gives me the paperwork. So it's just easier to work with somebody who knows how to do this, guys. It makes life much, much easier. Ingrid, do you want to ask the fun question? Do you remember what I asked?
I don't remember.
All right, so Chris, I'm going to get into the fun stuff now just because I know it's already 5:01 and I'd be mindful of your time. I ask this for everybody. If you could go back in time, any time in your life, you have 2 minutes to talk to yourself, when would you go back and what would you say to yourself?
Oh, goodness.
I know.
I would
so you have to be a thinker.
probably go back to when I was a senior in high school and just tell myself that there are other options out there than just going to college and finding that job, because it's so apparent in today's world that you don't need that college degree. You can in of yourself from the ground up. Marlon, right? Marlon's his name?
Marlon Johnson, uh-huh.
Yeah, I mean, he told that story when we were at that event.
Mm-hmm.
I was floored, from his story. So, I mean, he's a perfect example of someone who really, like Phoenix, rose from the ashes.
That's awesome. Very cool. You remembered that. And by the way, he's my performance coach now, and Caroline's accountability coach because she lives in the manor. And so Marlon runs that house. Make sure people stay.
Yeah, you guys are invited over tonight. I have to get off of here because I have a few more things to do, but we're having our family dinner tonight, and then we're playing the cash flow game with Robert Kiyosaki. You're invited over. We're playing at 7.
Right on. Chris lives in Maricopa. It's like,
come on over. You'll be here. Perfect. This is perfect enough heads up. Perfect enough time for you to drive over from Maricopa.
I'll be at the desk probably until 8:30, 9 o'clock tonight. I got a lot of policies to figure out something to do with.
Oh my gosh.
Yeah.
Right on. Well, thank you so much, Chris, for spending time with us and for explaining to us about insurance. It's always like a funny subject in our communities of investors because we're so afraid of it. So like me, think like E-Myth, think like Who Not How, another great book, which is how can you delegate a complicated thing that you're not an expert in? And I can say I'm not an expert in insurance. And so then I just got my who just does it for me. So
best way to do it.
I really appreciate you both having me on. It's been fun. We can do it again whenever you decide, and I'll be watching.
Right.
Thank you, Chris. Hey guys, one last thing before you bounce out of here. If you're listening to this recording afterwards, please share it with somebody, share the knowledge. We want everybody to be millionaires, getting out of their W-2, having more free time, spending more time with your kids, doing what you want. So if you're still watching us, please like this video. Please subscribe to our channels. We're trying to grow this so we can get this to more people. And Chris already gave his phone number. Let me pull it up one more time just so it's at the end of this. So you guys have it. His phone number is 520-610-3306. And his email is Charlie Alpha Hotel Alpha Lima Lima @amfam.com. So CCAHALL @amfam.com. Chris, thank you. Ingrid, I want to hang out with you soon. Everybody, have a great day. Go do something that makes you better. Bye, everybody.
Thank you.